abrupt and disastrous collapse of FTX had an impact on the entire cryptocurrency market. The third largest cryptocurrency exchange is currently in a death spiral with billions of dollars still hanging in the balance. You've come to the right place if you're wondering how FTX got to this point. Here is a detailed account of all the mistakes made. A cryptocurrency exchange with a basis in the Bahamas is called FTX. Sam Bankman-Fried launched it in 2019, and it allows users to purchase, sell, hold, and trade cryptocurrencies, although those features aren't now available owing to the firm's demise. In its heyday, FTX invested its cash in several sponsorship agreements, in addition to sponsoring Squad Solomid, TSM, which was briefly known as TSM FTX. The corporation also signed an agreement with the Mercedes-Benz Formula One team. The Miami Heat's arena also changed its name to the FTX Arena. These deals are all obviously off at this point, along with other stars including NBA player Stephen Curry, tennis player Naomi Osaka, and many more. Tom Brady and his wife Gisele Bündchen signed on as celebrity endorsers for FTX. Gisele Bündchen also agreed to serve as an advisor for environmental and social efforts. Even a Super Bowl commercial featuring Larry David as a loser who loses out on advancements like the wheel, electricity, and, of course, cryptocurrency was made possible by it. A class action lawsuit filed against FTX names a few of its famous sponsors. Bankman-Fried headed the company as CEO from the beginning until FTX declared bankruptcy. John J. Ray III took over when Bankman-Fried left to guide the business through a significant restructuring process. How did we get here, then? Let's take a brief detour in the past before getting into FTX's decline. This year has been difficult for the Bitcoin sector as a whole due to a variety of issues. Uncertainty in the economy and the failure of the Terra protocol, which underpinned the Terra USD stablecoin and its sister token Luna, sparked a chain reaction that led to the demise of a number of further businesses during 2022. Numerous businesses, including Three Arrows Capital, Celsius, and Voyager Digital, filed for bankruptcy over the summer as a result of this so-called crypto winter. When did FTX's situation start to change? When CoinDesk published a critical article on Alameda Research, the cryptocurrency trading company also owned by Bankman-Fried, things started to go south for FTX. According to CoinDesk, the majority of the assets on Alameda Research's balance sheet were represented by the native FTT coin of FTX. This sparked worries about how closely related the two companies were, and their ability to artificially increase the value of FTT. Creating more issues for Bankman-Fried, anxious investors withdrew their money from FTX after Changpeng CZ Zhao, the CEO of the cryptocurrency exchange Binance, announced his intention to sell Binance FTT holdings. The outcome was a bank run. But wasn't Binance meant to purchase FTX? Okay, perhaps. Binance signed a letter of intent to purchase FTX on November 8, but included language indicating the arrangement was non-binding. A day later, Binance withdrew from the agreement, claiming FTX's problems were beyond its control or capacity to aid. The notice from Binance referenced news reports involving client cash that were improperly handled and purported US government investigations. That's because, at around the same time, Bloomberg reported that US regulators are investigating whether FTX really mishandled user cash, and the Wall Street Journal reported that FTX used approximately $10 billion in consumer assets to support dangerous wagers at Alameda Research. The moment when FTX declared bankruptcy, on November 11, FTX and Alameda Research filed for Chapter 11 bankruptcy, and Bankman-Fried resigned as CEO at the same time. A number of internal problems at FTX are revealed by the filing, including the likelihood that the business hasn't even confirmed the number of users on its platform and that it doesn't have an exact list of bank accounts and account signatories, which is pretty terrible. Similar problems are described by former workers to the Wall Street Journal, who also note that the company's poor record-keeping made its earnings and losses uncertain. On Twitter, Tara McAuley, who worked with Bankman-Fried to launch Alameda Research, claims that she and a few others left the company because of worries about risk management and business ethics. In the petition, FTX's new CEO John J. Ray III notes that he's never seen such a catastrophic breakdown of corporate controls and such a complete absence of trustworthy financial information as occurred here. Ray previously helped Enron get back on track when it collapsed. My colleague Liz Lopato lays it all down here if you're interested in learning more and reading how Ray roasts FTX and Bankman-Fried. Later court documents, such as the one listing every organization FTX and Alameda Research owe money to, also make some suspicious conduct evident. According to the statement, Alameda owes its top 50 debtors a total of $3 billion, including $55,000 to Jimmy Buffett's Margaritaville Beach Resort in the Bahamas. What was Bankman's reaction? Bankman-Fried sent a sequence of single-letter tweets that actually spelled out what occurred, before starting a lengthy Twitter thread after admitting that he fucked up to the Twitterverse. In one tweet, Bankman-Fried notes that, a few weeks ago, FTX was processing about $10 billion per day of volume and billions of transactions. But there was more leverage than I had anticipated. Liquidity was depleted as a result of a market meltdown and bank run. In a letter to workers that Bloomberg acquired, Bankman-Fried expressed regret to the staff and detailed how FTX's collateral, the assets that a creditor would take possession of if the borrower failed to repay the loan, had dropped from $60 billion to barely $9 billion. FTX's assets that make up that collateral were not specified by Bankman-Fried. However, CoinDesk's first said that Alameda used almost $2.5 billion of FTX reserve when he was almost margin called. What about those lost clients fund? Remember the wave of unauthorized transactions that cost FTX an extra $477 million that the thief continues to launder. Although the perpetrator of the heist remains unknown, some doubters think an inside FTX employee was responsible. What impact did the FTX decline have on the cryptocurrency market? Cryptocurrency investors are concerned. Given the size of FTX, other exchanges like Binance and Crypto.com may also experience failure. Due to the general uncertainty, the big cryptocurrency brokerage Genesis lending division suspended loan redemptions and new originations, because it couldn't afford to handle the unusually high volume of withdrawal requests it began to receive after FTX's demise. Bloomberg reports that the business's creditors are presently looking into their possibilities to prevent the company from declaring bankruptcy. However, Genesis isn't the only company having trouble as a result of FTX's failure. BlockFi, a business that enables customers to purchase, sell, and trade cryptocurrency, stopped allowing withdrawals on November 28 before declaring bankruptcy under Chapter 11 at the end of November. What will now occur to Bankman-Fried? Really, we don't know yet. According to a Bloomberg study, Bankman-Fried's worth fell by 94% in a single day, from around $16 billion to $1 billion. Bankman-Fried asserts in a recent interview with Axios that he still has $100,000 in his bank account. And in this case in Degen investing we say wrecked.